Alrighty, folks. Welcome back. Good afternoon. Here we are. 420. Don't really celebrate 420, so nothing eventful. But marijuana is legal in New York, so I imagine there are people living their normal everyday lives, doing their normal everyday things. But anyways, with all that excitement aside, an interesting day, right? We talk about when we talk about this trend being consistent or not, we start to all right, we're going to need to see tomorrow some bid, right? You're going to need to see some bid, or else we're getting a natural sort of consolidation up here forming. Again, we don't get to, we have a plan in motion of having a long term trade. So, is there anything today that from where we entered long term trades that we would have to get out? Not today, definitely not. But it definitely will beg the question if tomorrow you continue to sell for something like if we just use a generic sort of trade like Apple for an understanding. You can see here, if you entered anywhere in here for a long term trade, there's nothing about today that is pushing you out of that, right? But again, if we start to come down here, and this would be sort of the start. It's definitely would just be the first step in terms of it. But you could definitely see how this could be the start of that move with the candle in the way that we have sort of this uh, this outside bar of a day and leading to less of bid and more to the downside. Now, what I would say here is that in terms of keeping this trend going, we talk about healthy price movement. And price coming down a bit here allows for new buyers to come in. And so since you actually have a larger lower wick in the body of the candle came back up, coming into close, that can show that price is going to now be pivoting out of that low. And that's exactly where some of our mindset really is and how some of the bias we're using this bias that this trend's going to continue and that it's going to be different this time. Normal price action, this would come back down. We would swing up and it would be, think of it almost like a normal consolidation that takes more time. It takes more than a week or something to consolidate. This move here is very large. It would take more than a week to consolidate this move. The bet here, again, is that it's not. It's going to be different. We're going to get these very short pullbacks that lead to the same trend, right? This idea of a continuation from just this move. This would, again, it's either or. It's either or, and we don't get to decide yet, and that's why we let our bias and our plan do the work for us. We don't make decisions here. I would say, looking through the rest of the week, we'll be looking again to see how this climbs. And when we put this into perspective again, we are just over 1% away from all time high, right? And so when you put it into perspective of coming into Friday, even to get back into all time high, we do over 1% a day anyway in this market. And so it takes 1% days to be deep into all time high again. And that would really push us up. And that's where if you think to Monday, it it doesn't really. This is the trend we've been on. So to put 2% by Monday, that's the trend we've been on. And so at the end of the day, it's definitely, if you put it into context of where we are in the move, it's basically nothing and sort of a bite on the top of profit. When you look across the board, you start to see it a little bit more when you look at the value side, that the value side is still the strongest, and so there's so many positions today that did very well on the value side still, and that's where a lot of our attention still is when we think of things like the healthcare side that I've been sort of the most confident on, and I've talked about since last year the most really. These sort of moves here today continue to really drive home that idea and definitely cement my sort of my position there of my long term trades, and so that definitely helps with when you're trying to maneuver some of the day to day when it comes to when it comes to the new positions. So again, I have about 90% of my port just set. I'm not really doing anything with it. Again, we would need to come down a few more percent for me to have to get out of those and take profit. When we talk about new positions that I added today, I think the most interesting one is Baba. We're still right there, right where I entered. Uh, this definitely makes. I mean, it just it leads into definitely an interesting predicament for everyone, and that's sort of what I like about the trade, taking it today instead of waiting until tomorrow or waiting until next week. It's in a very interesting spot where there are risks of gap down, and that is certainly priced into the options. So by buying here, you're getting a pretty cheap price. If you put it into context of if you gained 1% here, those options would gain a lot more than the natural 1% due to the underlying because of where it sits. And so if you kind of remove where this level is, you're just sort of dropping off a cliff, right? But you're really not. That's sort of the bedrock of the idea here. So I put on big Baba trade, betting on this idea that this sort of price action is being overdone a bit. And if you look at these other tickers like JD here, this is just Baba shitting on JD here. That all of these moves here, at the end of the day, it's only Tencent and Baba that matter for any Chinese companies, and they're both just shitting on these charts right now. But when we look again at the Hang Seng, there's nothing here. There's no price action here. It looks like the other growth tickers that we have that are just at the low. They're just kind of waiting. They're just waiting to get some demand. And a lot of China is waiting for the regulations to drop off, and then we just get going again. So I like that trade a lot today. I think that's a lot of fun. Now, what's the other trade? We were looking for our travel side. We opened a lot lower on travel, and so we were looking to put on airlines today. And so what started it was just the UAL earnings. So obviously I didn't we didn't really touch this side of things because this started the selling, and so we went into AAL, took this trade at the low, right as it broke into this equilibrium, right into it really, and so we took it from the equilibrium here. Now again, this kind of trade here, it doesn't need to. It's not that you're taking a trade that's a good trade. That's not what it is. It's not about taking a good trade here, right? It's about taking a trade that has broken away from the rest of a trend. And there's obviously a connotation of earnings here in selling that's happening here that it's overdone. It is overdone. And so trying to buy into this level a little bit, the thing here that's different is there's an expectation on my end that you're not going to get this sort of candle again. If this here, I bought on this low, and that shouldn't happen again. This sort of whipping, and we did it here as well, right? This sort of whipping should not happen, and I don't expect it to. Now, if the market decides it wants to do that, then I will buy that again. But this, because again, it's free money for this overselling. The thing to remember here is that this is all short-term volatility. It has nothing to do with the actual long-term connotation here, because no one's selling a long-term position. And again, that's the difference between sort of the value side and then this part of value is that this is all just short-term volatility. It's just it's entries and exits from this portion of time and not from any other time. And so there's no long-term being exited. And so when you get this sort of large type of selling, all it is momentum. It's just momentum, and that's sort of the idea here as well. It's just a little bit too much momentum. So we bought it, and whether or not this actually does well, again, it's even lower on. We're back to break even on after hours. We'll see what this looks like tomorrow. And again, it's not about perfect timing. We're trying to take a trade that, if we're betting that this is the low for it to this is our entry for a long-term trade here, and we'll see how that does. Now CCL is also something we've had a pattern on. This came into the trend line. I got stopped out from the very start of it. We took it again. Not perfect, obviously not perfect timing again. So same idea here on this side of travel. A little bit more volatile. So I talked about this is a little bit shorter term in terms of entry comparatively to the airline side. And again, this is you're revolving around earnings a little bit. We already had earnings here. They don't matter on this side of things too much. I think the UAL thing here, that earnings were less. It's not about the earnings right now. It's about guidance. And again, it's just coming into earnings season, you get the spooks. Everyone gets a little spooked on everything that's going on. And best way you can see it is a small cap. The selling that happened here today is everything has to do with earnings that are coming and hasn't even happened yet. It's about all the earnings of, oh God, what could happen here? We speculated about good earnings. And so again, we get this sort of action that makes it very difficult to take any trade. And again, I talked about to get this average, because this is a terrible average, to get it, it would need to be over here. We didn't get it, and so we're back to just trading the individual small caps. I posted a chart in the channel about if you look at the actual. I don't think I could load on this on the screen, but if you look at that, you can see how well the small caps were outperforming the S&P. We're talking about like 15% outperformance at one point in March at the all-time high, and now it's actually back to break even with S&P. That might actually help it here. I didn't really think about that too much, other than we knew small caps were doing very well. But now, right here, this selling, this 2% actually equalizes it with the S&P, and that actually sets up an interesting sort of paradigm of, well, now if everything's trading together, which we really have been trading together pretty well here, I would say the market's been doing pretty well, and we can follow the flows pretty well, uh, comparatively to some other times, right? And so that might actually boost the morale of some of those that sold because of these ideas that again are stories. They're not actual things that have happened yet. It's based on, well, there's fear of earnings, and so uh, if you remember, everything's about record earnings this season. It's about records quarter two earnings, and so that can put in a stipulation of, okay, we're not going to do as well here. We think we're going to do great, but we may not do great. So people start to sell. We'll see how much of that translates back to this trend. The real thing to watch here is, again, is if we're just going to fit this line through here, right? If we stick on one line through and just keep trading on that, whatever it is, right? We keep trading on our trend. That's really what it comes down to. And so when we build sort of week to week here, we'll see how we're revolving around that trend line, right? So if this is our high above the trend line, and this is our low above the trend line, we'll find out what that spread is. And so in whether or not we can consistently sort of trade that, right? Whatever that spread's going to be, that's, we're looking for what that's going to be. I would say that this is less than 2% spread from high to low. So for every single week, if our high to low around our trend line, if we call this our trend line, which it has been our trend line for over a year now, if this is our spread 2%, that's definitely doable. And for earnings season, that would be like that would be the nicest gift ever for this trend here, is if it's only 2% and we just trade up here like this and swing back and forth around the trend line. That would be a good way to continuously get bid, right? Because you can't just go one way. As we saw, volume will start to drop off. Let's see if this offers some chances to buy coming into today into tomorrow, right? Again, we don't really get to see all of it. We saw buying come off the low, like just like I was being aggressive in buying off lows. Let's see how that translates to tomorrow. And again, I have such a bias right now, and it's shifting all of my trades, and I'm purposely doing that. It's important to still realize that if price does something else, that we'll react accordingly, right? And for most of you, if price trades a certain way, you react accordingly. It's important to see how using this bias of this idea of this trend's continuing and trying to get an idea of, again, like I just saw, what's less than a 2% spread from high to low around this trend line. Using this bias to continue to push and manage trades is a really good way to handle a day like today and allow you to take advantage of opportunities. Whereas if, when we usually just look at every single day and judge every single day and try to be critical and put every single piece together, what can happen is you get a little bit more sensitive to it. And what I would do is I'd start to overanalyze this candle and overanalyze price movement today in the flow, and then try to predict what's going to happen tomorrow. And that's why using this sort of bias that I have now, I'm not doing that. I'm actually thinking more. I'm thinking further out than that. Not that I don't usually do that, but what I'm not doing is saying, okay, there's two red candles. I'm going to exit these positions here and look to re-enter here. We're not doing that because we're not taking swing trades like that, right? And so this is very much within the model of my bias right now. Again, though, if we get candles that in price action that does not confirm that, then that attitude will shift accordingly. And so it's important to remember that. I mean, it's not like I'm gonna dumbfoundedly watch price come down to my break even and then be like, oh well, I guess I missed this whole trend here. Like that's not gonna happen. And so I'm gonna try to do my best to maneuver through these. And again, I think it's hard when I take some of these trades at lows today, like some of these, like the Baba trade, or like yesterday, I take some of those trades and then they get stopped out today. And then you look at those and then you go, so I talked about like the shop trade yesterday, buying it here, and then this happens, you get stopped out, and then we get this candle here that's still very good. And it's hard to, I think, for everyone to have different, based on your own bias and your own trades, to be able to look at that and say that was a good trade or that was a bad trade. And these sort of things, they change so much. And so using this bias, you can overcome some of the in the moment decisions that are definitely different from that overall, because again, everything that we have is trending to the upside. I mean, basically all my portfolio was value and it just keeps trending, and it looks like the market here, right? Looks like the market here where you just have these two candles, and this is much easier to trade around right here. And most positions look like this, but then trying to look at this here and then make these trades that are just completely out of the woods, completely different. I don't think it's very, I think it's harder, and it actually seems like not good decisions. And it may seem like into your own portfolios that, okay, I'm not going to do that again. I lost money on that. I'm not going to do that again. And this is where being consistent, even on this side, is important. And so trying to form some sort of bias that doesn't overtake everything, but actually sort of hold your hand a little bit to make some trades that are a little bit more, let's put it, a little bit more aggressive and risky, I think is important. And so whether or not we pay off, and, whether or not this travel move pays off, we'll be able to see. But I do think it's important to be able to capture these, because at the end of the day, I mean, we're not going to get the margins that institutions are getting. And when you put it into the view that they're able to just, they can hold through all of this and they don't care, and they just keep pushing and nothing really matters. It definitely means that we need to take advantage of these, even in this moment, when it translates to some of these tickers that are much further down comparatively to the average. Those are the places that we need to take advantage of. And, we've done that the last 2 days, and, we're using it off of a bias, though, that's not going to continue to pull back when there's no reason why this can't keep pulling back, right? We're just betting that it's not going to. And so we're going to use that bias to really dig deep into, to push those positions and get, grab them. It's not going to be easy. It's not going to be easy because it doesn't need to. This is a lot of points, and most times price is going to consolidate, right? And so we're going to try to do our best to push through that and feel through it. And when it changes, we'll adapt on the fly, right? We'll adapt based on it. If we take a look, I already showed the Apple chart, but just bring it up again. When we look at these again, the mega caps are really leading the way on the growth side. And in these tickers, again, this would be a bit of a bearish candle here, but it's very strong still in terms of whether this causes a breakdown or some sort of longer term consolidation. I would still say these are strong candles. Nothing that would signal to me that this is going to cause a larger problem. Now you can see the after hours action. It's sort of coming back into the low. And so we're going to need to see again tomorrow. But when I look at these kind of candles, I say, okay, this is actually set up pretty well for continuing a longer term. And that's, I think, the big difference is we're talking about two different things. One could be a short-term move to the downside, which could be very quick and violent. And the other one is this, it could take time to the downside. And that's where, which one's going to be better? It's the quicker move that would be better here. And that makes things kind of difficult because we've had this very continuous uptrend. And if we get a longer term downtrend here, that can make our position of trying to push a long term position and have that bias difficult, because we could have, think about it, if we get these last 2 days and we do that all week, our positions get kind of thinned out and it becomes difficult to gauge. And so we're going to be watching that, and I think we can basically just watch that through the mega caps because that's where all the liquidity is anyway. We'll watch those and see what those moves look like, and if we just continue to get a downturn, if they're not all doing it and they're sort of all sort of converging back and forth to one another, then I think that's probably good confirmation that we're not getting into this longer swell of downturn. Again, I put most of price action yesterday to hedging. We're coming into earnings, so hedging going into earnings. And then today we had just a continuation from that, but it definitely was a stronger day and more aggressive buying, even from my own side. So tomorrow we'll look for the tail end of that to see if we get into the bid or if we get this quick selling and we see what that looks like. If we get more of the same, then we're gonna definitely look to try to figure out like a timing, because some of these, when you think about it, let me just use Apple again. If we think about it, how many days can you hold this down through here? Well, depending on where you entered, if you entered here, you can hold for fucking 2 weeks. Here, you could hold for a week. And think about it, right? You're from here. This wasn't even 5% yet, but we're talking about, we're talking about long term. And so even to come into the halfway point, if we come down, let's put this for here. If we come down, this would be Monday. Even 2% on Monday is still within reason from this point. Again, if we're talking more from, let's say, a gradient between, because this is when we got through, just to put into more perspective, you're still talking about you'd hold it through here's the Friday into the weekend for another 2%. So the thing here would be the timing, right? If this all happened at 2% tomorrow, I would hold through that easily. I'd have no problem. It's if it has tomorrow it comes here, the day after it comes here, the Friday it comes here, and then Monday it does it again. Okay, we're going to remove our bias and go, okay, this is not what we want to be doing, right? I don't want to have to, I'm not going to sit here and wait to sell at a low or something. So we still obviously are judging price based on its ability to make moves, because when we still look at the other side of the aisle of value, there's still so much to be had there. And a good example of what I'm just talking about here is banking. See how this just sold immediately to support and then offers the move? That's the kind of price action that will allow a trend to continue. This offers healthy price action, instantly sold to the level. And if this continues tomorrow, then we just continue the trend. And what it offers is this outlying candle that did everything that you want it to do, which is I can push through my long term here. I held this level, and I can push through my long term here, and this offers new buyers, new opportunities. And the buying that happens here is so much quicker, and it doesn't cost as much money to get the points back in. The problem is over here, it continues to cost more and more, and you're not getting new demand. But over here, what happens is the price action coming down, you can get more demand, and it doesn't cost as much demand as it costs through this area. It'll cost less demand to get back into here, and it'll allow for less demand to continue to push price. And that's the thing about the all-time high, right? And through highs. And so this price action, if it was a week of selling this 2%, it causes some problems, because again, now you're talking about the timing. This here, it was all at once. And so that's why even today, I just don't even, as soon as we saw it here, I feel good about it. And that's very different comparatively to something that continues to come down, right? And so that's the kind of price move that we're looking for this kind of trend. And I do think is difficult to see the difference between. It's a sort of a tumultuous time with earnings, and then to think that some of these earnings don't matter, but we're still getting reactions. So we're going to need to see what other people think still, right? We're pretty early into the earnings, and I think the tech earnings will be the one that I think will back up what we're seeing the most, because at the end of the day, we can get something like UAL moving because of earnings, right? And then say, okay, that's pretty silly, because at the end of the day, it doesn't matter what just happened right now. What matters is what happens the next earnings and the earnings after that, right? Which you can always say. And so when it comes to the tech earnings, they really don't matter right now. And so really looking to see that we just got this anxiety out of the way. And if we just get this all out of the way right now, then this allows for us, again, we're just trying to put these travel positions on now. This is actually a pretty good time, I think. And so we look at sort of the negatives of today as the opportunities of tomorrow, right? And so I think we're in a good spot for those trades. And we'll see how they do tomorrow and through the end of the week. I don't foresee that we have to get out of those positions by tomorrow. The travel trade, I think even if they open up a little bit lower, you're probably still in that position based on the options. So we'll see how those do, right? Let me lead it into the dollar discussion. Still trending down. We saw a lot of buying on the bond side, so no issues on the bond side, and also more demand going in there than we've seen recently. And so we know some of the cash is being spent there. We know it hasn't specifically gone to equities the last 2 days because we haven't got much of an inflow there. And then if we look at the other side, so the dollar continue to push down. We see gold continues to trend up here as well, which was our bet coming out of this low. Looked very much like the rest of these double bottom ideas, and this continues to trend here. Going to be interesting to see how this continues to do, and to see if we get into a longer term situation here, which would be just like on the equity market. If we see this trend continue, again, you can get price action that swings back and forth. You need that, and especially on the gold side, we're going to be watching that in conjunction with the Bitcoin move, right? And so whether or not this dollar move continues to push the rest of our assets up, and whether or not, as we go through a little bit of volatility because of earnings coming out of there, if we get everything moving together, and I've talked about this before, where equities, gold, and Bitcoin all move together, it signifies a lot, because it means that the dollar pushing down, for every dollar that is every time that dollar is pushing down by a point, right? Every single one of those points is being put into a risk asset, is basically what it signifies. And so if gold, Bitcoin, those alternative assets are going up with the equity market, then that means every dollar is being spent. And especially if we see the bond market being healthy like it is right now. And that's what we want to see, because it's going to take every dollar out there being spent consistently to cause a trend to continue here, right? And that's where, as long as that's happening, there shouldn't be fear or an anxiety that's going to stop things from moving, right? And that's where we really look at any selling that happens, a sell event, we look at as an opportunity as opposed to risk. And that's where we are right now, right? So if we do continue to get these moving, that's where I was able to really go say, listen, this was on a weekend, and we understood sort of what was revolving around here, and we put that into perspective and of where you are in price now and how healthy it is again. That you put these together, and we're building biases, right? We're building biases and trying to build the plan through and get the confirmation, and so that we know when these things are not within that plan, then we can go, okay, time to remove this bias a little bit. I'm gonna pull that back, and we can teeter it as we need to, right? And so I think that's seeing everything together today is definitely one of the more positive things. Not to say that equities are up, but if we just keep it in the bias of it's within the trend, then that's still a positive, right? In terms of the rest of trades, there's things like Disney coming down here at the low, all over. I like the low trade from here. Again, these are not easy, but trying to build up the last portion of my portfolio and grab these at what I believe are to be lows, lower end of the range, and take these, I think is the way to be going here, right? I talked about it yesterday, continue to say it today. The best time to enter was yesterday. That looks like a best time to enter was yesterday sort of candle right there. And so we had a lot of those today. And yeah, yesterday, a lot of those actually continued to go down. And so did the same thing today and said, okay, best time to enter was today. Yes, yesterday was the best time to enter. Today's the best time to enter. And if they come down further again tomorrow, well, then that changes the tone. We no longer have the support idea. And so I talked about it from yesterday that if this did fail, it's like climbing the ladder down. So we're putting our foot down, and this is the last rung to climb on some of these. And so that's how I looked at some of these charts today and said, okay, this is my rung to climb on here, and I'm going to try to step up from here on the growth tickers, right? The growth tickers, not specifically anything else. And again, everything that's within the same move here, that's what we're looking at. And if you look, a lot of these that we did enter yesterday did well. And I would say that this is a good candle here on like Square Inc., the Tesla candle as well, right? These were good reactions to that low buy we got. And that's where, again, it only takes one of those trades to make the other ones feel okay. And you get stopped out on the other ones, but the money you make from this low trade to here is still more than all of those stop outs combined. And we're not even trying to get for today. You don't care about today. You care about 2 weeks from now, right? And so, again, it's only going to take one of those to give you enough confidence to keep doing it. Stick with it, right? Stick with it. And that's where if you have those positions, continue to look at those positions that you've done well on and see how those are growing or how they're handling the situation, and that'll allow you to obviously figure out your risks and whether or not you can be taking every single one of these risks or not. And that's why you hear me saying the things I'm saying and doing the things I'm doing here, because of really where we have been. That can sometimes be a negative thing, and you can definitely you could definitely let past performance negatively affect your performance here, but that's where the discipline part comes in. And I actually look at that as discipline and say, no, that's me being consistent and disciplined, not being irrational or something like that, right? Not much of a chaos part. The PG move here, I'm really interested to see what happens tomorrow. Again, our Dow ticker is doing very well still. This move here I thought was very fascinating coming off the earnings, and it's these kind of things that still show some of the willingness to buy in, that they're outside the market forces. We love to find velocity on its own. So going to be curious to see what happens there. I mean, I don't think any of us really care about anything other than to watch what happens on the Hang Seng here today and to see if Baba does well. So who cares, right? I think those are some of the more interesting ideas to see. This trend is just, it's so strong here, but it seems so weak. And then you look at the individual tickers and they're so weak. But I think this is pretty strong, and I think there was some unfounded anxiousness today on some of those tickers, and I think they're gonna probably see that tomorrow. We'll see, right? We'll see. One other thing is Europe. Europe had a bad day today. I would suspect that they're gonna do much better tomorrow. Some of that selling again is Europe being a little aggressive all the time, and they just sort of go whichever way. If Asia's down or if the U.S. was down, then they'll go aggressively that way, and they seemingly do that all the time. Let's see how they do tomorrow, right? Because if Asia does well, then Europe does well, and then we open higher, and then we go, oh, okay, so it doesn't matter. Again, intraday moves don't matter so much. It's the after hours and pre-market action that matters. So really excited to see what we get. Will tomorrow will not be as much of this aggressive low buying, because we sort of did that yesterday and today, and we're already in our long position. So if you didn't take those today, I don't really see those happening at the open. So just to put that into perspective, why I bought them today and yesterday at lows. If that's something you're like looking to do, then I would definitely say it's, we'll see where price is, but I would definitely say it's going to be riskier to do tomorrow overall. If you think about your trades being week to week, then starting it at the beginning of the week is just like the same as buying at the opening of a day. And I think that probably coming into tomorrow is going to be able to see that a little bit, even if we go bid, right? Because the opening higher part removes all the anxiety. And that would definitely make buying things tomorrow difficult if we open higher. So it's definitely good if you're in position. It's not if you're not, because it becomes very expensive to buy long-term trades if you open up higher. It's just that it's one of those, that's the fallacy that comes in there with the long-term. Short-term doesn't really matter because it's all so volatile to begin with, and you're not pricing in volatility 3 months from now. Long-term trades, think of options. It's always more volatile later into the future, right? And that's where if you do open up a percent higher, well, now your math is all fucked up, because now you have a lot of volatility in the short term, and that means all the volatility in the long term needs to be more than the short term vol. It's very funky in there, right? And so that's why I like to buy at the lows for these long term trades for sure. So we'll see how that translates to tomorrow. And again, maybe we'll look at some specific. Tomorrow I'll come in with charts for option prices, and maybe we'll watch those, because again, we don't really have intraday price to watch, sort of with the positions we're in. So I'll bring in some charts for options, and maybe we'll watch those and see how the prices work to see how you can have price down, but the options are up, right? We'll look and see if how those are doing tomorrow, or if it's the contrary, and we actually see options getting blown up, and we watch the prices get absolutely blasted. So whatever it is, maybe we'll watch specifically the options a little bit more because that's sort of the important information at the moment going into later. So that might be interesting. So we'll do that. It's a beautiful day in New York City, so I'm gonna go walk into the park. The benefits of living on the park. I'm gonna go to the park, get some sun, take a nice little run, little stroll. I will see you guys tomorrow morning. Watch out for charts and some things tonight, and I'll see you. See you in the morning. Enjoy.